Good afternoon and welcome to Managerial Accounting Fall 2022 semester. We are the week after Thanksgiving now, so we really have 2 weeks of class left. It's officially 5 class days. We have the 2 this week to talk about chapter 27, the 2 next week to talk about chapter 28, and then the following week on Tuesday is our review class for the last exam. As I indicated to people who were here in the classroom before I started recording, the chapter 28 next week is a very short chapter. And so it's feasible to cover that in just 1 class day. So we will decide on Tuesday at the beginning of class whether we want to power through and finish up on Tuesday, or if you'd rather split the chapter and still do half on Tuesday, half on Thursday. I have no preference about which way is better or worse. So I'll let you decide. You can think about that between now and Tuesday. Just before the break, we covered chapter 26. And so the chapter 26 problem should be submitted for grading by the end of the day today. And that will be a good review to, if you haven't already turned that in, to refresh about that chapter on capital investment analysis that we covered before the break, because that is on our last exam. I looked at the exams today and that you took just before the break. It looked like overall grades were pretty good. You should have complete review access now, so you can take a look at your own exam. You should be able to see all of the questions, what you answered, what the correct answer is. There may be some explanation or calculations showing there. As always, I can't talk about the exam in class or on the recording, but if you do have questions that you want to go over with me, I'm always happy to do that. You just need to let me know what you have questions. You can send me an email, you can schedule time with me on Zoom or in my office, or if you're on campus, you can talk to me before or after class. Any one of those is fine. But please do be sure you go over your exam and let me know if there's something that you're just really not sure why your answer is wrong or how the calculation is done or something like that. As I said, this week we'll be covering chapter 27. So the chapter 27 pre-quiz should be submitted today, and then the exercises due on Thursday. Starting today with the announcement, I will list all of the remaining due dates for the semester just to keep that at the top of your mind, and so you can kind of check them off and see how close we are getting to the end of this course. As I said, Tuesday, December 13th is officially a class day, but that is just review. There will be no new material covered that day for sure. Even if we decide to condense chapter 28 all into 1 day next week, the review for the last exam will still take place on Tuesday, December 13th at our regular class time at 1:30, and it will be on Zoom. So I do not plan to be on campus that day as of now, unless something changes, but we'll have Zoom review if you choose. It's optional, just like all the other review sessions have been this semester. You don't need to sign up in Starfish as you have for the other ones, because it is at our regular class time, and we'll use the class link for that review. I would expect that we will take a look at the practice set for the last exam. It covers just 3 chapters, 26, 27, and 28. In practice, we'll finish our new material by December 8th and possibly even on December 6th. So you are welcome, once we finish that last chapter, whichever day that is next week, you are welcome to just move ahead and finish up all the remaining assignments, including that last exam. If you are ready to do that, you do not need to wait until after that review session on the 13th. If you are planning to move ahead and take that exam earlier than scheduled, if you do have questions, obviously you should ask those, but you don't need to wait for that review session if you do want to be able to move ahead and get this finished up and give your free time to some other class or project or paper or whatever. So any questions about any of that? Anything you want to talk about from chapter 26 on capital investment analysis? Any questions lingering from that? So we talked about the 4 different methods of evaluating capital investments. The first 2, accounting payback period or rate of return method. And sorry, I think I just compounded 2 things. Accounting rate of return or the payback period method. We talked about advantages, disadvantages of those. We looked at the other 2 methods that do take into account the time value of money. That is the net present value and internal rate of return approaches. Again, we talked about advantages, disadvantages of each of those, how companies decide what investments they make sense for them based on whether they meet some minimum expectation of return. Everybody's good with that? Okay. Well, if there aren't any questions, I'm going to show you one more thing. So part of today's class, I can get up here to the reference materials folder. Part of the time scheduled for today's class, if you look in the reference materials folder for chapter 27, and that's what's showing on the screen right now, you can see that there are links to 2 videos there. These are both YouTube videos. I checked the links right before class and the links still work. I always am concerned. I knew they worked back in August, but I hadn't looked at them since then. So, excuse me, part of the class time for today, I do want you to watch those 2 videos, but I don't plan to make you sit here in class and watch them together. For people who are watching on the video, that's not a wise use of video time either. So I will plan to wrap up the in-class portion of class early enough today to give you time to watch both of those videos. So one of them is like 5-ish minutes long and the other one's about 24 minutes long. So I will plan to wrap up class by 2:40 today to give you time. At that point, for those of you who are here, you're obviously welcome to stay and watch them in the classroom if that is easier for you to just, keep doing what you're doing. Otherwise, I would expect that you will watch those sometime before our class on Thursday, so that if you do have any questions about them, you'll have a chance to ask those. So let's take a look then. Excuse me. Let's take a look then at chapter 27 on lean manufacturing and activity analysis. So we have several learning outcomes related to this chapter. We're going to be talking about what it means to be a lean manufacturer, what implications that has for accounting for companies that are using lean manufacturing, because the principles that we talk about with lean manufacturing apply to the accounting department at just like every other department within the organization. We will talk about using activity analysis to improve operations, and as we frequently do, we'll then take it to, does this information, does this concept apply in a service organization as well? And of course it will. And so it's important for us to keep in mind that although our focus this semester is primarily on manufacturing companies, there are lessons to be learned for all types of organizations. And that's certainly true when we talk about lean manufacturing concepts. So you can see on this slide the immediate focus of the lean manufacturing principles. We are trying to produce a high quality product at low cost We want to be very nimble or responsive to changes in the market, to changes in customer demands. And so as I've mentioned many times throughout this semester, the idea of pull through production as opposed to push through production. Pull through production is we produce because we have an order for it. And that means we're not producing for inventories. As we talked about absorption versus variable costing, we saw some of the accounting income advantages of using those pull through production processes, not producing just because we can. And so all of that feeds into the lean manufacturing principles. You may have heard the term just in time or JIT as it relates to lean manufacturing. So the idea of just in time means that we don't carry inventories. We have everything arriving, everything available to us just as we need it. So we're not stockpiling. We're not incurring those inventory carrying costs. We're not risking the, we're not taking a risk that our materials or our processes become obsolete or spoil or get lost or stolen. And so the idea of just in time, we typically think of when we're talking about raw materials arrive just as we need them to incorporate them into some product. But it really applies to much more than that when we talk about the lean running of a business. It means that we are keeping exactly what we need and we're reducing waste and creating efficiencies at all points in the business. And that's why the lean manufacturing principles can also be applied in non-manufacturing parts of our business and in businesses that aren't doing manufacturing at all. So we're focusing on reducing inventory, reducing lead time, which means how long does it take from when you get the order until it's shipping to the customer and you can book that revenue and collect from that customer. We're trying to reduce setup time. We're trying to reduce wait time. So one of the exercises we'll do today is, I think, really eye-opening when you think about wait time, that you have a product sitting there idle time in between processes in the manufacturing. So when we are using lean manufacturing principles, and I know that I talked to you guys about Eli Goldratt and I'm trying to remember which chapter this was, probably chapter 25 maybe, when I talked about that book called The Goal and the idea of streamlining our processes. Those principles in that book, The Goal, are really very much aligned with the lean manufacturing compared to traditional manufacturing. So in lean manufacturing, we would set up a assembly line or a production line where, rather than grouping our machines together based on what the machines do, so you might have a separate room or a separate building for the machines that cut versus the machines that grind versus the machines that polish. In lean manufacturing, we are more nimble in our processes and we group the machines together so that they form really an assembly line of produce, all of the steps required to produce a single product. And we're able to reconfigure and move those steps around within our manufacturing facility to cut down on some of that idle time where we're not adding value to the product. So I had, all the way back in chapter 15, I had given you, and it's in Brightspace in the reference materials folder, it was kind of a flow chart that talked about categorizing costs. And we talked about fixed versus variable and product versus period. And the one I told you at that point that I was least concerned about as far as most of the semester was the value adding versus non-value adding. But when we talk about lean manufacturing, that really is a focus of lean manufacturing, is reducing, and ideally, the end goal is to eliminate all of that non-value adding activity. Anytime we are not working on improving the quality or the value of that product to the consumer, that's dead time. That's time that's wasted. That is time that we are spending money, but not getting any of that in return from our customers. And so that really is one way of thinking about lean manufacturing, is we're getting rid of the goal is to get rid of all of those costs that don't translate into increased revenues from our customer. We're trying to be as efficient as we can to make sure that every cost that we incur throughout our organization is making our product more attractive and more valuable to the customer. So, not to jump ahead, but as you look at the final bullet point on this slide, by removing production problems, by implementing just in time as it relates to our inventory at all steps in the process, we are eliminating or greatly reducing a lot of the cost concepts that we've been talking about, starting again in chapter 15. In chapter 15, we talked about the 3 different types of inventory accounts that traditional manufacturing companies have: raw materials, work in process, and finished goods. Well, if you think about this from a lean manufacturing standpoint, we shouldn't have a lot of raw materials sitting around in our warehouse or in inventory at any time. If they're arriving just as we need them to incorporate them into the product, we shouldn't have a lot of raw materials on our balance sheet at any given time. We're also greatly reducing the amount of work in process because, again, we are focused on that just-in-time concept, pull-through production. We produce because we have a sale. If we can eliminate what's called throughput time, so I shouldn't say eliminate, if we can limit our throughput time, which is the time from when we take the order until we ship it, so the time for this order to go all the way through our system, if we can limit that throughput time, we are also greatly limiting the amount of work in process, literally the money that we have invested in the product as it goes through our entire process before we can bill the customer for it. We also are limiting finished goods inventory because we're producing because we believe we can sell it, because we have an order for it in many cases. And so it's not sitting on the shelf or sitting in the store waiting for someone to come along to buy it. We're producing it because someone wants to buy it. And so when we think about the implication for accounting, most of our costs then, at the end of the month or at the end of the accounting period, most of the cost for manufacturing is going to be where? It's going to be in cost of goods sold on the income statement. And our inventories on the balance sheet are going to be close to zero. Just probably never going to be exactly zero. But the goal is to be as close to zero as possible. So again, if we think about the way we've been doing the accounting for costs within a manufacturing company, starting with that flow chart that's in the chapter 16 folder in Brightspace, we make a purchase and it goes into raw materials. And some of those raw materials go into overhead and some go into work in process. And then we incur payroll costs, and some of that might go into overhead and some into work in process. And we apply the overhead and that goes into work in process. Each one of these steps requires accounting intervention, right? It requires someone on the accounting staff to be making these entries. So then we're working on the product, and maybe if we're using process costing, we have even multiple work in process accounts at this product is in our accounting records moving through those accounts. And finally, we finish the product and we move it into finished goods. And then at some point down the road, we actually sell the product and we move it off the balance sheet and onto the income statement. Well, under just-in-time inventory or lean manufacturing principles, if the goal is that at the end of the period, we have very little inventory and most of it has been sold, we can actually cut down a lot of the work for the accountants by simply treating all of those costs as if they're going to be sold. In other words, rather than going from raw materials, work in process, finished goods to the income statement, if we think most of it's going to end up on the income statement to begin with, why don't we just start it there and eliminate 3 steps? We put it on the income statement as cost of goods sold. And at the end of the month or at the end of the accounting period, we look at that and say, yeah, but did we really sell all of it? And maybe if we didn't, we have to move some of that cost back to the inventory accounts, back to the balance sheet, because it hasn't actually been sold. We call that concept backflush costing. So the idea is all of those manufacturing costs start on the income statement as cost of goods sold. And at the end of the period, to reconcile that, we make entries much smaller and much easier in just one entry to move the part that hasn't been sold back into finished goods, the part that hasn't been finished back into work in process. And if we do happen to have any raw materials, we might need to move those back into the materials inventory account. But in general, we assume that most of the costs that we incur in the month are going to end up in cost of goods sold by the end of the month anyway. So why not just start with them there? So those kind of efficiencies are really what we're looking at with lean manufacturing. It's eliminating waste at all steps, even in the accounting department. We are trying to be critical about what is it that we are doing here? What can we stop doing that's not actually adding value to the product? And our customers definitely do not care whether we use the traditional front-facing, move it through all of the inventory accounts, or if we use the backflush costing approach. They definitely don't care about that. That accounting process adds no value to the customer. So we need to do it as quickly, efficiently as we can to stop wasting money on processes that don't add value, that don't make our customer willing to pay more for our product. Okay. Any questions at this point before we start looking at our exercises? So there are a couple exercises in this chapter that are exercises I want to ask you to complete on your own, because they're not what I think of as the doing of accounting. It's a read this story, read this problem and answer the question. And they're in many cases multiple choice questions. So the ones I would like you to try on your own include exercise 1, which is one single multiple choice question. Exercise 4. Exercise 5. So I would like you to do those 3 that I just mentioned. Would like you to do those on your own. Exercise 1, 4, and 5. And today then, together, we will do exercises 2 and 3. So I already mentioned the term lead time, and I also use the term throughput time as well. So lead time or throughput time represents the amount of time it takes from when we start the order until we finish the order. And that would include literally from when we take the order from the customer until it's shipped out the door. And so as we look at the lead time for a product, it's important to keep in mind how much of that throughput time or how much of the time we spend on this is actually adding value, because every single minute that we have the order and we haven't shipped it to the customer so that we can start getting paid is adding to the cost of producing that product without adding to the value of producing that product. So our first exercise that we're going to do together is exercise 2. And this is focused on reducing setup time. As we think about that, I think I've really already implied this, but I just want to make sure that you're clear that the time that adds value is time that we are actually producing the product, literally working on that specific product and taking the raw materials and turning them into the finished product that we will sell to the customer. To be clear, if we have a batch of 10 units that we work on one at a time, if we are working on unit number 1, that means units number 2 through 10 are sitting, waiting, not having any value added to them. And so from a lean manufacturing standpoint, the idea of working in large batches is really counterproductive. So if we have a product that takes, let's say, 5 minutes on one machine, and we are producing this in batches of 100, that means it's going to take 500 minutes to do that whole batch on this one machine. Out of that 500 minutes, only 5 minutes is adding value to each individual product. And literally the other 495 minutes are wasted time. So under lean manufacturing principles, we should spend the 5 minutes on that product, and then it should be moved on to the next step in the process so that someone else, whoever's doing, the next machine, is continuing to add value to that. In order to make that work, we have to use the concept of production setups where we have all of the steps in the process sequentially right in a row. Because why do you think companies would do a batch of, say, 100 items? Then I'm picturing someone in a manufacturing facility standing there at their machine, and they have to their left, because I'm right-handed, to their left, they have all of the parts that need to go through their machine, need to have, their process done to them. They've got a box of 100 parts on the left, and then there's their machine. And on the right, there's an empty box. And so they take one part out of the box to their left. They spend the 5 minutes, in my example, the 5 minutes on that part, and then they put it in the empty box on the right. Now they take another item out of the box on the left, spend the 5 minutes, put it in the box on the right. They do this 3-step process 100 times. 500 minutes later, however many hours that is, this whole shift. The shift is like 480 minutes minus breaks, right? So a whole shift later, they have a full box of parts that are ready to be moved, across the building or into the next room to the next step in the process. And so it seemed really efficient because the person running the machine is standing there at the machine and is constantly working. And so it's efficient for that individual because he or she has been working the whole time. But from the lean manufacturing standpoint, we don't want to look at it from the efficiency of that individual, but we want to look at it from the unit of the product. And so for that 1 unit of the product, out of that 8-hour shift that the person running the machine just worked, that unit of the product got 5 minutes of value added time. And the other 495 minutes were wasted, sitting in a box, waiting their turn to spend their 5 minutes on that machine. Do you see how that focus is different? If we say, yeah, the person running the machine was busy the whole time, they were producing the whole time, and that's absolutely true. But 99 parts at all times, 99 units of the product were sitting, waiting their turn and not having any value added to them. And so as we look at our exercises today, God bless you. As we look at our exercises today, that's the focus I want you to be taking, is for each unit of the product, is it adding value? Is it experiencing a change or an increase in value? Or is it wasting a lot of time? And again, it makes sense in the scenario I just described, when we have a whole room full of machines that all do the same thing, and the next step in the process requires them to be transported into another separate room or separate building or whatever. When we don't line up the production line efficiently, it seems like it makes sense to produce a whole box of parts and then take them to the other room. Because yeah, I agree, if you took one part at a time and walked into the next room or into the next building, you're wasting a lot of time in transportation as well. That's also not adding value. And we're going to see that in one of our exercises here in a minute. So just so you can see what I'm trying to describe here visually, all of these transportation and waiting your turn, none of that is adding value. All of it is adding throughput or lead time, and none of it is adding value except the 2 points in this visual. One, when the product is actually having the holes drilled in it, and 2, when it's packed into the box to be shipped. And all of these other transportation and sitting around steps are not adding value at all. And so as we think about lean manufacturing principles and what is value added, one way of comparing that or looking at that is this value added ratio. We take the amount of lead time that's actually adding value and divide by the total lead time. Obviously, we want ideally for that ratio to be close to 100%, close to 1. That the majority of our time is spent adding value to the product. But under the traditional manufacturing approach, I can tell you that that value added ratio is much, much lower than 1, which is of course the ideal. As an example, and then we'll go to our first exercise for today. We can see all of these steps required to produce, in that diagram that I just showed you, where you were drilling the holes and then packing it for shipment. Well, the other steps in the process included moving the raw materials from storage or from the warehouse to the machine, then to the assembly, and then to the packing room, and then it sits around and waits its turn to be packed. And so of the 125 minutes from the time the raw materials leave the warehouse until they're ready to be shipped, of those 125 minutes, just 30, 40, 65 of those 125 minutes are adding value to that product. Just 65 out of the 125 minutes, or 52% of the time spent, is actually adding value. Lean manufacturing would seek to raise that percentage to as close to 100%. You know, in a perfect world, it would be 100%. Every single minute spent working on that, or spent on that product, is adding value to the product. Because again, one last time, every minute we spend that's not adding value, but adding cost, lowers our profitability. And that's the bottom line for the company. Every minute we spend on a product that's adding cost, but not adding value to the customer, is lowering our profitability. Let's go then to our first exercise for today. Get there. Okay. Any questions on what I have just outlined about lean manufacturing? Okay. This is exercise 2. Vernon Incorporated has analyzed the setup time on its computer-controlled lathe. The setup requires changing the type of fixture that holds a part. The average setup time has been 140 minutes, consisting of the following steps. So I'm just going to say, before we go through all of these, I'm just going to suggest that this might be the extreme version of this exercise. That even as we read through this, even if you have zero manufacturing experience, as we read through this process, I expect that you're scratching your head saying, why would they do it that way? But if you can understand it in this concept, in this context, you can maybe apply it in contexts where it's not 100% clear. It's not as easily, readily seen. How do we improve this process? But it's important, of course, for us to identify the steps that are unnecessarily wasteful of time and therefore of cost. So this is the process. As of right now, the process has taken 140 minutes, and this is how it goes. We need to change the fixture on the computer-controlled lathe. And so we turn off the machine and we remove the fixture. We go to the tool room with that fixture that we have just removed. And that's a 15-minute process. It's in the next building. We have to stop and say hi to Joe and Sam on the way. When we get to the tool room, we have to record that we're replacing that fixture that we removed, because you have to track, we have to keep track of who has the parts and where they are. So you record that you're replacing the fixture. You go back to the lathe, you clean it, you go back to the tool room and get the new fixture. Then you go back to the lathe and put the new fixture on, and you turn the machine back on, and 2 hours and 20 minutes later, you are ready to start using the new fixture. A company plans to set up a machine to increase the productivity. The average setup time is 140 minutes. Do you think, based on what I just read to you, do you think the management needs to minimize the setup time?
Yes.
Yeah, I think it's clear. Yes. Over 2 hours to change the fixture is unrealistic. And why is that? Because long setup time leads to increased economic cost of the setup. Again, every minute we spend working on the product but not adding value to it is wasted time. A company plans to set up a machine to increase the productivity. The average setup time is 140 minutes. The company wishes to control the setup time. Identify the statement that suits the given situation. So what do we want to do? We want to look at all of the steps in the process that we've just gone through, and we want to identify which ones actually add value and which ones are non-value adding activities, so that we can reduce or ideally eliminate all of the non-value adding activities. And that would be letter A. So how much time would be required for a setup using your suggestion in B? So we need to go through these steps and identify which of these steps actually add value. So I'm going to use a star to indicate the ones that add value. Do we need to turn off the machine and remove the fixture, the old fixture? Yeah. Do we need to clean the lathe between fixtures? I think that's probably a good idea. I think that probably makes it more reasonable. Do we need to install the new fixture?
Yeah.
Of the ones that I skipped over, going to the tool room, recording the replacement of the fixture, returning to the lathe, returning to the tool room, recording the withdrawal of the new fixture, returning to the lathe. Do any of those actually add value to the product?
All of the remaining ones.
Yeah, all the ones I did not start. No, because basically they involve the employee just, I don't mean this in a derogatory way, but wandering around, right? He's not actually working when he's, you know, walking from his machine to the tool room and back again twice. Even if he has to walk to the tool room to get the new fixture, does he have to do it twice? Even if you say he has to do it once, does he really have to do it twice? Or do you think he could remove the fixture, clean the lathe, take the old fixture and exchange it for the new fixture? Do it in one trip.
You could do it one trip.
Yeah.
Whoever.
Yeah. Yeah. The employee could do it in one trip by cleaning the lathe either with the old fixture still available or after he brings the new one back. There's no reason to make two trips, one to drop off the old fixture and one to pick up the new fixture. Don't even ask me why it takes him 5 minutes longer, 33% longer to return to the tool room the second time, because he's probably just bored of walking to the tool room and back every time. I don't know. Why does it take 18 minutes to record the replacement of the fixture, the old fixture, and 12 minutes to record the withdrawal of the new fixture? I don't know, but definitely those things do not add value. So of the three things that we agreed, I hope you agree, add value: taking off the old fixture, cleaning the lathe, putting on the new fixture. How many minutes is that? The only three necessary steps: 15 plus 20 plus 5, 40 minutes. 40 minutes. Anyone have any ideas about how we can improve this even beyond the consolidating the trip to the tool room to just one trip? Any other ideas how we might make this even better? You want to know my idea? Why are the fixtures in the tool room in the first place? They're used with the lathe. Why aren't they kept with the lathe?
Oh, that's a good point too.
It does not suggest here that there's only one fixture and 3 or 4 different machines are sharing it. That would be a bad plan too. So if the answer is they have to be in the tool room so they're secured then maybe we just have a secured box by the lathe. How far is this tool room from the lathe that it takes 15 minutes to get there and 20 minutes to get back?
That seems a little expensive.
Yeah, like I said when I started this exercise, they're really trying to make a point by making this a really extreme example. But those are the kinds of questions that one should be asking to try to implement a lean manufacturing environment. Why are we, every step in the process, you should be asking, why do we do that? Does it add value to the customer? And if it doesn't, do we have to keep doing it? And if you're really honest about it, much of the time, the answer is, no, we don't really need to do that. God bless you. God bless you. I may have said this in an earlier class this semester, but when I used to work outside of academia, when I would ask somebody who maybe had longer time with the company than I did, why do you do it that way? And the person's response to me might have been, well, because that's how we've always done it, or because that's the way I was trained. That's the way the person before me did it. That was one of the worst things you could say to me, because that demonstrates, one, you're not really thinking about the reasons you do your job, which means you're definitely not thinking about how could you do this better. So under lean manufacturing, one of the advantages is we empower our employees to ask those questions. But why do we do it that way? Why do I have to go sign out the tool at the tool room? Why don't I just have a set of tools at the lathe that I can swap in and out as needed? Why am I wasting hours of my day wandering off to the tool room twice when I don't need to do that, when it doesn't add value to the customer? And so empowering the employees to ask those questions and to constantly be looking for ways to innovate, to improve the processes, to increase that value added ratio that we just saw. Those are all key components, necessary components. If the people who are doing the job don't know why they're doing it and don't have the ability, aren't empowered to say, wait a minute, is there a better way to do this? You can't expect someone from the outside, maybe the managers who aren't hands-on doing that process, to be able to recognize how to make it better. The people who are doing the process need to be permitted and rewarded for coming up with improvements to the lean manufacturing process. Okay, any questions about that? So again, extreme example, but those are the kinds of questions that we need to ask. Why are we spending 140 minutes doing a process when only 40 minutes of it is actually adding value to the customer? I've really kind of given you a heads up on this exercise on computing lead time. Williams Optical Incorporated is considering a new lean product cell. So by a cell, we mean a manufacturing cell where we have all of these steps in the production process lined up efficiently so that we are reducing the wait time, reducing the transport time, because everything happens, literally right in a row in our production facility. The present manufacturing approach produces a product in 4 separate steps. The production batch sizes are 45 units. The process time for each step is as follows. You can read them. The time required to move each batch between steps is 5 minutes. In addition, the time to move raw materials to process step 1 is also 5 minutes. And the time to move completed units from process step 4 to finished goods inventory is 5 minutes. So we've got some wait time, we've got some transport time in there, and we're producing in batches of 45. The new lean layout will allow the company to reduce the batch sizes from 45 units to 3 units. The time required to move each batch between steps and the inventory locations will be reduced to 2 minutes. So again, we're lining up those steps to cut down on the transportation time. The processing time in each step will remain the same. So in other words, the production process will still include step 1, 2, 3, and 4, and we're not making any of those steps faster, but what we're trying to do is reduce that, cut down on that idle time. We're asked to determine the value added, non-value added, and total lead times, and the value added ratio under the present and proposed production approaches. And so down here at the bottom, we have a table where we're going to put in those data, but for our calculation purposes, I'm just going to keep my screen right here so that I can show you these calculations. So I'm going to put the titles up here just because I need that space for writing. So we're going to start with the present approach. I'm just going to call it the traditional approach because that is really what we think of as traditional manufacturing. And then over here, I will do the lean manufacturing approach. So remember, the traditional approach is a batch of 45. And our proposed lean approach, the batch size will be just 3. Oops. Okay, so we'll start with the traditional approach. So in order to, before we can do step 1, we have to transport the raw materials to from the warehouse where they're kept out to the production floor to the location that's going to do step 1. And we're told that that takes 5 minutes. Now we're going to do process step 1. And it says that it takes 5 minutes. But remember what I was describing a couple minutes ago in class, it's 5 minutes for each product, and there are 45 products that have to go through step 1. So it's not just 5 minutes, it's 45 times 5, or 225 minutes that the product is sitting at step 1, the batch of 45 units. Again, picture what I was describing. There's a machine, there's a full box of 45 parts on the left and an empty box on the right. And they take one out and they spend 5 minutes working on it and they put it in the box and then they take another one. So of those 225 minutes, 5 are adding value and 220 is idle time. Now it tells us that the time required to move each batch between steps is 5 minutes. And so we finish process step 1 and we move the batch to the next piece of equipment, the next machine or whatever it is. And step 2 takes 8 minutes. God bless you. Step 2 takes 8 minutes, but it's 8 minutes for each of the 45 items for a total of 360 minutes. And then it takes 5 minutes to get it to the next location. I think you get the idea at this point, right? And then it takes 5 minutes to get it to step 4. And then it tells us the time to move completed units from step 4 to finished goods is another 5 minutes. So the total time for the traditional batch size, 5 plus 225 plus 5 plus 360 plus 5 plus 180 plus 5 plus 135 plus 5. So if I just added those up correctly, I got 925 minutes. Everyone agree with that? Let's check my math here. Yeah, 925 minutes. How much of that 925 minutes is adding value? Well, each step in the process adds value, right? 5 plus 8 plus 4 plus 3. None of the transportation time adds value. None of the waiting time while the other 44 units are worked on adds value. And so the value, whoops. Do that. The value adding time is just 20 minutes. 5 plus 8 plus 4 plus 3. And that means the non-value adding is 905 minutes. And that value adding ratio is 20 out of 925. And we're asked to round decimals to round percentages to 1 decimal place. So that would be 2.2%. 2.16 or 2.2%. And what did we say the goal was for that value adding ratio? We're going for 100%, right? The goal is to reduce, eliminate any non-value adding time. You think there's room to reduce some non-value adding time here? Yeah, I would say so. And so what do they propose? They propose cutting the batch size from 45 down to 3. Okay. They aren't talking about improving the time spent on each process. The 20-minute of value adding time is going to be the same under the traditional approach and the lean manufacturing approach. The value adding time will remain at 20. What we are trying to do is cut out some of that non-value adding time. And so what we do is we suggest an approach of taking the four steps in the process and lining them up so that they are geographically close to each other. So rather than filling my box of 45 parts and spending 5 minutes carrying it to the next room, I'm going to fill my box of 3 parts and turn around and hand them to the person at the next station. And so we're going to cut that time to 2 minutes instead of 5, because we have our processes lined up so that it's more efficient. And so this is what it ends up looking like. Move that up maybe just a little bit. So we have 2 minutes to get the raw materials. And then our batch size has gone from 45 down to 3. And so process 1, I can learn to type. Process 1 is going to go from 225 minutes down to just 15 minutes. And then another 2 minutes to transfer that. And then 3 parts at 8 minutes each, or 24 minutes. And then another 2 minutes of transportation time. And then 3 parts at 4 minutes each. And then 2 minutes for transportation. And then 3 parts at 3 minutes each. And then 2 minutes to get it to finished goods. So now where are we? Our total time for this batch has gone from 9:25 down to 70 minutes. And as I said, our value adding time will still be 20 minutes because the only steps that are adding value are the actual processes for 1 unit. And their non-value adding is down to just 50 minutes. Still not ideal, but 50 minutes of non-value added time is a lot better than 905. And our value adding ratio is now 20 out of 74. 28.6, rounding off. So the ideal batch size under lean manufacturing may be just one unit at a time. So that we never have, as we have even in the improved scenario here, we never have 2 parts waiting while the 3rd one is worked on. Now we really have to do a careful analysis to see if the 2-minute transportation time would make that worth it. But we'd want to look at that. And the ideal batch size should be just 1. So let's see if I can fill in my chart here, if I can read. Our value adding time was 20 minutes under both approaches, but the non-value adding was 905 and 50 for a total of 925 versus 70 and 22.2% compared to 28.6% for the value adding ratio. I did transfer all those down correctly. So again, kind of an extreme example here, but this one at least seems a little bit more realistic. That we think we're saving time by doing batches of 45 and not making the person doing process 1 after each step, after each unit, transporting it into the next room, or having runners who are doing that transportation for us. By lining up our processes into coherent work cells to produce this product, we can really cut down on our idle time. And by reducing the batch size to as low as 1 unit, we might become more and more and more efficient. Okay. Do you see how this might be beneficial to improve our processes? By switching the focus from our workers being efficient to looking at the product and saying, is the time spent on the product efficient? And it's a whole separate question, but you can imagine why it might make people a little anxious if the implication is you're not doing a good job at your job because it's not efficient for the product. And we need to change that mindset from the focus on the worker to the focus on the product. Then how do we be most efficient at producing that product? Okay, so this is where I'm going to stop for today, because not everyone was here at the beginning of class. Let me just summarize a couple things. One, the remainder of what you have set aside for your class time today, my expectation is that you are going to watch both of these videos. Toyota was really the pioneer in the lean manufacturing environment. There are many books written about the Toyota system. And so I have chosen just a couple brief videos, less than 30 minutes total. And that's what I expect you to do with the remaining time that you have set aside for class. You don't have to do it here. You don't have to do it right this minute, but I do expect you to do that before Thursday's class so that you have an opportunity to ask any questions or talk about that if you want. Then I think everyone was here when I said chat. Questions 1, 4, and 5 are all kind of multiple choice. Read the scenario, choose the correct answer questions. So I expect you to do those outside of class as well. And when we come in on Thursday, we will pick up, I'll of course ask if you have any questions about what you watched, and we will pick up with exercise 6 and finish up this chapter on Thursday. Also, before next Tuesday, you need to think about whether you'd rather power through chapter 28 and cover it in one day, or split it like we have been into 2 shorter classes. All right, any questions before I stop the recording? All right, thank you for being here. See you on Thursday.